So in this video, we are going to talk about the number one mistake people make when moving and it comes to their mortgage. And then we are going to discuss some of the tricky aspects of qualifying for a mortgage, especially when we're moving from one city or province to another. Let's get into it right now. So the biggest mistake I see when people are moving is that they port a mortgage over that is actually not at a very good rate, and they actually end up spending more money by keeping this mortgage in force rather than paying the break penalty and getting a completely new mortgage. So I guess to clarify, what do I mean when it comes to porting your mortgage over? Well, when you sign for your mortgage, you're generally on a term. There is your amortization, the overall length of your mortgage, and then there's the term for the length of your mortgage. Generally, that's in Canada, 5 years is the most popular term for your mortgage. So every 5 years, you can either renew or pay out your mortgage or move it to a different lender at no penalty. Or when it comes to moving or porting your mortgage over to another property, you can take these existing funds that you have and move them onto a new property without any penalty. Now, on the outset, that always sounds like a great idea, and that's one thing that I would look for is discuss whether or not I need a mortgage to be portable and whether or not I think I'll take use of that in the future. But there are some things you have to consider when it comes to whether or not your mortgage is even portable in the first place. If you are in a variable rate mortgage or an adjustable rate mortgage, it can be very challenging to move these over. The nice thing about these mortgages is that they generally have the lowest break penalties. So if you are moving to another property, paying that penalty might be just the best option that way. With some of the adjustable rate mortgages, the mortgages have to be the exact same amount on one property over to the other. So that can be a challenge because it's generally speaking, you either buy a bigger property or a smaller property. You generally don't go straight across. So then you have to think about that in regards to your mortgage. And when it comes to a fixed rate mortgage, what you have to do is the calculation between what the new mortgage rates that are available, and sometimes there are some great promotion rates on, and what your break penalty is and what your existing fixed rate mortgage is. So you do your calculations that way and see whether it is advantageous to actually port your mortgage. Because people think, well, I don't want to pay the penalty, but then they don't realize, oh, actually the long-term play is to pay the break penalty, get the lower interest rate, and you end up saving money down the road. So the important thing is to do that calculation. So a mortgage broker can help you out with that. Of course, if I can help you with that, give me a call and we can run the numbers for you as well. So when it comes to porting your mortgage, there's a few things that you have to think about as well. Whether or not the property itself is even eligible. So for instance, if you're moving provinces and you have a mortgage with a credit union, well, the credit unions are only in those provinces, so they wouldn't be able to port your mortgage over to a different province. As well, the type of mortgage that you are in does matter, so I would recommend phoning your lender before you start this whole process and ask, is my mortgage portable? And if so, what are the break penalties and what is the timeline when it comes to it? Because it can vary. Sometimes it's simply a 30-day portable period. Sometimes it's 90 days. So that's lender specific. So you have to check that out to make sure you fall under those guidelines. And keep in mind, you do have to requalify for your mortgage when it comes to porting. So mortgage qualification can be a little bit tricky when we're moving cities or provinces over. It becomes the simplest scenario if we have the same employer and we're simply changing cities, say from Toronto to Calgary. Something like that, when we are staying with the same employer, or if we are actually able to work remotely and we're still keeping basically the exact same job, just working out of a different city. Keep in mind with this though, the lenders will verify that you are allowed to work remotely on an ongoing basis, because not all lenders allow this. Sometimes only because of the situation we're in, because of COVID, they're allowing this now, but then down the road they won't allow this. So you have to check this out before you can qualify for your mortgage that way. As well, when we are starting new work in a new city, it can be a little bit tricky when it comes to the timeline. So, of course, when we think about how we wanted to move to a city, to a new place, we want to get our housing lined up, we want to start our job and get everything going that way so it's nice and organized. Unfortunately, it's not that easy. The lenders do need to see your job letter and pay stub. They need to see that you are drawing funds from that company and that you are working for them. If you don't have that pay stub, they will not fund a mortgage. So keep that in mind. That can make it difficult when it comes to the timing of your moving and where you're going to live that way. So if you, let's say, start a job on the 1st of the month and your first paycheck is on the 15th of the month, well, the fastest that you could close on a mortgage would likely be the end of the month or the 30th of the month. So when it comes to timing, keep those points in mind. As well, if your new job that you're starting has a probation period, you have to make sure that you are past your probation period in order for the lenders to fund as well. So those are a few things to keep in mind that can make moving a little bit tricky. Well, I hope you enjoyed this video. Hit that like button, hit that subscribe button. Check out my other videos for very helpful tips when it comes to your mortgage. And thanks for watching.